Hello everyone, thank you for joining us today and welcome to this educational presentation of a strategy that's built for the current market volatility. Now, I'm sure you've all seen the big moves in the markets going straight down, then 1 or 2 days up and then right back down again. A lot of traders are very discouraged or they don't have any idea of how to handle this. Most traders are caught on the wrong side. The minute they buy, it goes the other way. The minute they sell, it goes the exact opposite. So is there a way in which we can trade this current market volatility? Well, as we look at this chart here, this is a chart of the Dow. Recently, just as far back as a month ago, which really wasn't that far back, we really had low volatility. So it was kind of easy to trade, easy to invest. There wasn't a lot of risk. And then just as always, volatility just creeps in and all of a sudden it's just encompassing the market altogether. So it's tremendously difficult for a lot of traders who aren't aware of how to trade this. Now, going back as long as I can think of, one of the best ways to trade volatility has always been by using basic candlestick patterns, okay? Because candlesticks have been very good for determining what, in all actuality, they think the market is going to be doing. In fact, here's the traditional way of defining the way in which to use candlestick patterns. Candlestick patterns are reversal patterns, usually occurring at the top or bottom of a trend. So this is the way we've all been taught to use these type of patterns. Let's look at one entirely from the entire group, and this is the engulfing pattern. It's probably the simplest one to identify. It's one of the most popular, and it's all around. You see these being generated all around the time, okay, engulfing patterns. Now, remember that candlestick patterns traditionally are meant to be applied as reversal patterns. So that means that if the trend is down, as we see here in this chart of CCL, we're looking for a bullish engulfing pattern that's going to reverse the trend. And lo and behold, what do we have right here? A bullish engulfing pattern. So conventional wisdom would tell us to buy right here because that's a reversal pattern. But this is what usually happens, right? In the volatility. And what happened to that? I mean, this is supposed to work really well with the volatility. And then once again, we'll see the opposite. Here's an older chart of Apple. When Apple was going up, in just about 5 days, the stock gapped up tremendously and kept going higher. Most traders would say, well, the indicators are really overbought though, and we're looking for reversal patterns. And here is a bearish engulfing pattern. These are the type of patterns you want to look for when the market is reversing, because most likely it'll come down lower. So let's say you jump in and sell based off of traditional candlestick wisdom, and this happens, right? So is there a better way to trade candlesticks with the current market volatility? How can we better improve our odds for consistency while using candlesticks in this increased volatility scenario? Well, there is, and I'm going to show you how simple it is to apply by using our platform. This is the PTS Primo charting platform I designed and developed with Pro Trader Strategies. This is the educational platform that actually teaches traders how to trade with volatility. And it comes in just perfectly handy for you right now because it really fits the current conditions we're in. So this is going to be a great educational presentation today. Thanks once again for joining us. My name is Steven Primo, President and Founder of Specialist Trading. I've been trading for a total now of 43 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of them I was a specialist. That's where we get the name Specialist Trading. A specialist doesn't mean you're any more special than anyone else. It just means that you specialized in making markets in roughly about 50 or 60 stocks. So if you wanted to buy or sell a particular stock, a trader had to go up to the specialist, the one who made a market in that stock. So I was a specialist during the crash of 1987, very comparable to what's going on today. I made markets in stocks that were falling out of bed just the way they are right now. I traded through the bull market that followed after that, and I basically have just devoted my life now to teaching traders around the world in over 115 countries and virtually every state in the United States what I've learned and accumulated in terms of knowledge in my 43 years of trading. So if you can think of a strategy or system or a technique, basically I've traded it before. It's just been rebranded, another name. And so what we do is I teamed up with Pro Trader Strategies, and we just teach our students what works in terms of consistency and what doesn't. Our goal is to put this knowledge and education in your hands so that you never have to rely on anyone or anything else. You never have to ask anyone, what do you think of the market? What do you think I should do here? You'll have the knowledge and the information, and most especially the education to make your own qualified decisions. That's our goal. We don't want you simply to come here every night to find out what to buy or sell the next day. We don't want you here to be waiting with bated breath to see what I'm doing on a nightly basis. I mean, what kind of a mentor would I be if I had you just basically mimicking everything I do? A good mentor teaches you how to trade, but does not trade for you. And that's our philosophy at Specialist Trading. Now, before we begin, as always, we are required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results today using this particular strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. Now, we have a good crowd here today, so if you haven't done so already, feel free to follow us on Twitter. There's a lot of great educational information I post on a daily basis, anywhere from signals our strategies have generated to little bits of financial wisdom, but lots of great free information, so feel free to follow us on Twitter. Now remember, as we stated in the opening statements, we are different from other webinars you may have attended in that our only goal is simply to educate you. We don't have chat rooms, we don't have trading rooms at Specialist Trading, we don't force feed you signals and tell you what to buy or sell, or I don't tell people what I'm trading or what the perfect time frame is. And that would be actually a disservice to you as a trader. We want you to be educated in all these things so that you can make those decisions. So as you see here, my goal is not to trade for you, but to teach you how to trade with the specialist edge. It's the same edge that was taught to me some 43 years ago, and what I feel has sustained me, and hopefully it'll be able to do the same for you, okay? Now, since today is going to be run like a class, I want you to ask me as many questions as possible, but please, we have a good crowd here today. I don't want to stop for every slide to answer a question, so if you have one, please wait till the very end of class. I promise I will get to each and every one of your questions at the very end. We have a great offer for you as well, so it's worthwhile to stick around. On top of that, I will answer, though, only one question at this time, and that is this being recorded? Yes, it is, so if you have to leave early, or if you're having technical issues, many times if you log off and log back on, your problems will be resolved. But if not, don't worry. Every one of you will receive a link to this recording, okay? So, once again, we have a good crowd here today. Please wait till the end of today's class to ask questions. With that stated, let's begin today's educational presentation. So, we want to talk about trading volatility with candlesticks because candlesticks, in my experience, are very good for trading with this increased volatility. The only trouble is most traders trade them incorrectly. In fact, I would say all of us have been taught how to trade candlesticks incorrectly. So what is the proper way to trade them? Remember, traditional wisdom says that candlesticks should be applied as reversal patterns. Okay, so that means if you have a downtrend, you're looking for a specific reversal pattern where that the trend is going to change and go back up. And conversely, if you have an uptrend, you're looking for a specific candle pattern that's going to reverse so that things will go back down. That's the way we've all been taught, right? But guess what? Here's what I've learned. Candlestick patterns will have a higher level of consistency if you do the opposite, if you trade them in sync with the trend. Now, this goes against everything we've ever been taught. This goes against traditional wisdom where we're trying to pick tops and bottoms. But trust me, from someone who started trading candlesticks in the 70s, you have a higher level of consistency, excuse me, if you trade them in sync with the trend. For example, we see that this right here is a straight downtrend. Anyone trying to pick a reversal would have a very difficult time trying to make money. And it goes, the same route goes for an uptrend. If you're trying to pick a reversal pattern to the upside, you're not going to do very well. And we've all seen trends last weeks, months, even years. So trying to stand in the way of those trends is very, very difficult. You won't have a high level of consistency. Now, here are some standard trending tools. These are very generic. They have certain levels of consistency, not a lot, but they're okay to use. A lot of traders like to use indicators to find out what the trend is, okay? They'll use certain oscillators or whatever to see what the trend is. Other traders still like to use patterns. They'll like to see higher highs, higher lows, and vice versa. Still other traders, I would say the majority of you, have been taught to use different time frames, all right? Look at the weekly and make sure that the weekly and the daily line up together. If they're in line, if they're both going lower, then you're in a downtrend, but they have to be in sync. Now, these are all fine and well. They're not great by my experience, but they're okay to get by on. You'll basically, be doing fine, not great, by using these as a trending tool. But this is what usually happens when you use those tools to discern trend. They're usually a little bit late. For example, by the time you probably figured out that you were in an uptrend, it was somewhere around here. And that's when you decide to buy just in time for this to happen. Look familiar, right? So what we need is something that is able to tell us a little bit more in advance when a trend has been established and when it's going to end. It doesn't have to be the exact bottom or the exact top. It just has to give us a little better warning, okay? Something that is kind of translating. So what we need is an early trend detector. We need the market to translate what it wants to do. And this is the PET-D, the best tool I know for determining the short-term trend. I use it every day in all of my trades. It makes no difference what market. It makes no difference what time frame. It makes no difference which direction. So as we see here, excuse me, I'm sorry. The PET-D is a color bar algorithm. So we've made it simple. All you have to do is apply this by clicking on our platform, and the bars automatically change color, either green or red. If you see a series of green bars, that means you're in a short-term uptrend. A series of red bars means you're in a short-term downtrend. So you see, we knew well in advance, way back here, that we were going to be going higher, and we knew well in advance before we bottomed out that we were going to be going lower. So now, looking at this in hindsight, sure, most people would have said, well, okay, I guess we are in a downtrend. We broke this major support right here. So, okay, I'll, give in and say we're in a downtrend right here. But once you applied the PET-D, the PET-D had all the bars colored red way up here. We knew well in advance that we were in a downtrend. How about this uptrend in this older chart of Apple? Most people would say, okay, we're in an uptrend now. We just made a higher high. I guess I'll, join in now right here. Whereas the PET-D told us well in advance we were in an uptrend. That's the beauty of this tool. It's translating on a tick-by-tick basis what the market wants to do. So now let's go back to our old standard engulfing patterns and let's see how we could trade them in sync with the PET-D. Now here is the standard format for this particular technique. We're only going to buy if the engulfing bar, that's bar number 2, is colored green, all right? So if you're not really familiar with engulfing patterns, there are 2-bar patterns. Bar number 1, bar number 2, all right? Now bar number 2, the open to close range engulfs bar number 1's open to close range, as you see here by these brackets, okay? Now that's a standard bullish engulfing pattern. Usually we've been taught to find that at the bottom of a trend. We're not going to think about that anymore. The only thing we look at is bar number 2. We want to make sure that when we apply the PET-D, bar number 2 is green. It's okay if bar number 1 is green, but it doesn't really matter. Bar number 2 has to be green, okay? If it is, we have a high level of consistency that we're going to be going higher. For example, looking at this chart here, this is how sensitive the PET-D is, where most traders would say, well, Steve, there's no trend here. There's absolutely nothing going on. We're in a range market. I'm not going to trade this range market. Once we apply the PET-D, we see that we have a bullish engulfing pattern here. And if we want to confirm it, the majority of the bars have been green. We only have one red bar, not enough for us to tell us that we have a downtrend. So we've known, even though we've had a sideways market, that the market is telling us, it's translating that it wants to go higher. And now that we have a bullish engulfing pattern, bar number 2 is outlined green. So this is all signals go. This is okay. If we wanted to buy, this is a high probability setup, and the stock went up 12 points in 1 week. Now, most traders would say, wow, how did you know that? Are you following the news, or are you guys looking at the institutions, or do you have some special way of discerning what the markets are going to do? No, the market translated to us what it wants to do, and we just simply applied some structure in the form of a bullish engulfing pattern. That's it. Now, you can apply any trading, candlestick trading pattern with this. It really would make no difference. We're just keeping it simple by talking about engulfing patterns today. Now, let's say we want to sell, all right? We see a bearish engulfing pattern. Well, we're only going to sell if the engulfing bar, which is bar number 2 in that pattern, is colored red. So, as we see here, here is a bearish engulfing pattern, all right? It's a 2-bar pattern. Bar number 1 is usually up, but it doesn't have to be. And bar number 2 is down. Now, what we want to see is that the open to close range of bar number 2 totally engulfs the open to close range of bar number 1. Now, usually conventional wisdom would tell us that we want to find that at the top of an uptrend. But remember, there's no consistency in that old, outdated way of looking at this. We just want to make sure that bar number 2 is colored red once we apply the PET D. This is giving us a high probability setup for whatever we're looking at, whatever time frame, whatever market to go lower. All right, so let's look at this. Now we have a full-fledged downtrend. It's easy to see that FOSL is in a downtrend, right? But what do we have here? We have a bullish engulfing pattern. Now we've always been taught this is where we want to buy, right? At the bottom, because most likely it's going to reverse. Remember, traditional wisdom tells us that engulfing patterns, or candlestick patterns for that matter, all candlestick patterns are reversal patterns. So this is telling us it's going to reverse. But remember, we don't use traditional candlestick patterns anymore. There's no consistency in that. What we want to do is apply the PET D. And when we apply it, what color is bar number 2 outlined? It's outlined red. So that in no way is a buy setup. Why? Because it's going against the trend. Remember, we want to buy or sell in sync with the trend. And as you can see, how well did that work out, right? Remember, you will have a higher level of consistency if you trade candlestick patterns, for that matter, all candlestick patterns, in sync with the trend. Now, if you're looking at bearish engulfing patterns, why would you have wanted to take this and have it turn into a loss when you could have taken this bearish engulfing pattern that was confirmed by the PET D? Or if you missed that one, this one right here. You see how your level of consistency will increase if you trade candlesticks in sync with the PET D. All right, when we combine these two techniques, what we have is our candlestick combo. This is one of our most popular and consistent candlestick methods at Specialist Trading and Pro Trader Strategies. We have students around the world trading this with currency pairs, with commodities, with Bitcoin, and with stocks and futures. And remember, everything you're going to be seeing today is one click away. Everything is one-click access on our platform. We totally designed the platform to make it easy so that you could learn how to identify these setups on your own, and you wouldn't have to ever ask anyone, what do you think of the market? Hey, is the market bottoming out? Is it topping out? Do you think I should buy? Do you think I should sell? Basically, every time you ask a question like that, do you know what you're really saying? You're saying, I don't have enough experience. I don't have enough education. I really don't trust myself. So why don't you tell me what to do? And that is a recipe for disaster for a trader. You have to be able to make your own decisions. I'm not going to make them for you. That's not my job. My job is to educate you so that you'll be able to make them on your own. The beauty of this is that even though I'm not able to be there 24/7 with you so that you can check your work, we developed a platform which gives you the ability to do that and to learn on your own. All right, so let's look at some recent examples using this strategy and this technique coupled with the PET D. All right, here we have a chart in LM. Now, coming into February, it was going up, right? We have a nice uptrend. So what you would normally look for would be some type of reversal pattern. Once again, we're only going to be concentrating on bearish and bullish engulfing patterns. And right here, you have a bearish engulfing pattern. So before you saw this presentation today, you most likely would have said, hey, this is topping out. I think I'm going to sell. All right? But what do we teach you? We teach you that that really doesn't work in terms of consistency. If you apply the PET D on our platform, it's as simple as just clicking on this tab. You'll see the colors change. Now, what color do you see here in front of us? It's green, obviously. So what is the translator, the PET D telling you? I'm not telling you this. I'm not telling you, well, this is my opinion. This is what you should do. The institutions aren't telling you this. Some convoluted support resistant line isn't telling you this. What is the market telling us? Well, our translator is saying the market wants to go higher because the bars are green. So who are we to want to stand in the way of the market? So that means we are only going to be looking at this from a buyer's perspective. So what do we have here? Once we click on strategy number 5, we see that we have a buy setup right here. So this is a candlestick combo high probability setup. Now, once again, it's up to you whether you want to take this trade or not. In our course, we have 7 different ways of entering, 6 or 7 different ways for stop placement, and 6 or 7 different ways to exit. We teach you all the different ways so that you, not me, but you can choose which one makes you feel the most comfortable. But either way, whichever technique you would have chosen to enter, exit, or place your stop would have worked out pretty well because the stock gapped up roughly about 10 points the next week. Now, obviously, some fundamental news came out which caused it to gap up in mid to end of February. We don't require fundamental news in any of our strategies, in any of our courses. There's no reason to look at news. If you want to, you're free to do that, but there's absolutely no reason. As you can see, this is a perfect example. We never looked or require any bit of fundamental information in our strategies. And how did we know it was going to go up? Well, we didn't know it was going to go up 10 points, but we knew it wanted to go up according to our rules and the PET D. How about RCL? Okay, this is a clear-cut downtrend, right? I don't think anyone would say this is in an uptrend. But once again, most traders would say, well, Steve, you're in a downtrend. We're always looking to buy the lows, right? And conventional wisdom tells us that a bullish engulfing pattern usually picks the bottom. See how it stopped going down right there? So I'm going to buy right here, okay? Well, what's the PET D telling you? What's the translator telling you before you use that outdated way of trading candlesticks? It's telling us that we're in a downtrend. And you never want to buy in a downtrend. That's like swimming upstream. You never want to swim upstream. So why do you trade that way? All right? It's very exhausting, and you're not going to get or have much progress swimming upstream. It's no different when you're trading this way. You want to go with the flow. And the flow right now, according to the PET D, our translator, is telling us it wants to go lower. So the next thing we do is click on strategy number 5. Now remember, we're not just here to furnish you with setups. You know when a strategy number 5 setup has been generated. You will be able to identify these on your own. You're using this as a way to check your work. So let's say you thought there was a strategy number 5 setup somewhere around here. You check your work by clicking on the strategy number 5 tab, and guess what? You're right. There's a valid strategy number 5 sell setup, and it's confirmed with the PET D. So it gives you the confidence to pull the trigger to take this trade. Guess what? Stock fell 50 points. Now, we're not saying that you would have made 15 points, 50 points. We're not saying, we knew it was going to go down that much. All we're saying is that this was a high probability setup for this stock to go lower. Remember, in our course, we teach you 7 different ways to exit. Some of our traders may have gotten out with a 5-point profit, some with a 10, some with a 20. Is one better than the other? No. The one that makes you feel comfortable is the right setup to use. All right, let's look at another example here. This is in PGR. 2 buy signals that were generated, and they're outlined green. So, as we can see, the stock went up 10 points once again. Remember, we are going in sync with the market. We are not going against the market. Here's an example in you all. Okay, we've all seen the airlines just fall out of bed with the terrible crisis we're going through and with the market right now. Most traders would be looking for a bottom. It's funny here. This happened in mid to end of February, before the market really fell out of bed. Strategy number 5 had already generated a sell signal, and the PET D was already telling us this was in a downtrend well before this crisis got underway. How did the PET D know this? Because it's a translator. Remember, we don't have to follow fundamental news. In mid-February, the PET D was telling us United Airlines is in a downtrend. Don't buy this. So why would you wait till now to say, wow, these airlines are getting killed. I guess I should sell my shares. You would have known this in advance because that's how well these tools work. We're trying to educate you so that you don't have to rely on fundamental news, so that you don't have to say, oh, boy, the market's gotten killed. I guess I'm a long-term investor now. You would have known this a month ago that you shouldn't be in the market. So a sell signal was generated. Stock has fallen 35 points coming into the 12th or last week. And if you missed that, there were already more signals being generated along the way, the first week of March. Tesla, okay? Here's a perfect example of how we change with the market direction. Now, when Tesla was going up in January to February, buy signals were generated, and potentially you could have captured 350 points. We're not saying you would have. Obviously, most people don't have enough cash to purchase the stock, but you could have purchased out-of-the-money calls or some spread strategy. Either way, you had the potential to do that. But what happened when the trend changed? Well, guess what? We had 2 red bars, a bearish engulfing pattern, and strategy 5 generated a sell signal. Guess what? 300 points. Do you see how Tesla warned you well in advance, roughly about 825 points, or it should say the stock price at 825 points before it went down to the 500s, okay? This is how sensitive, but what a great tool the PET D is, coupled with a great strategy. EXAS, all right? Once again, we're kind of headed lower, not really that strong and not that strong of a downtrend, but the PET D is telling us all the bars are red, so we don't want to be long. We only want to be a seller. A sell signal was generated. The stock fell 16 points coming into last week. See, trading is really simple. It's the trader that overcomplicates it. Now, someone would say, well, how am I overcomplicating my trade, Steve? I'm only doing what I've been taught. Well, most of the things we've been taught, myself included, when I first started trading some 4 decades ago, really don't work. They're not consistent. I mean, if you rely on fundamental news to make your trading decisions, well, guess what? I did that 40 years ago, and it didn't work then when I was on the trading floor. I can't tell you the number of times I'd see tremendous earnings being posted by a stock. They were far better than the earnings that I had projected doing my research, and the stock went straight down. And vice versa. I'm sure that's all happened to all of you, okay? Or I can't tell you when the market was doing fantastic, and then all of a sudden something like the crash of '87 happened. Well, we're going through that right now. Guess what? The Pet D would have warned you well in advance to be out of the market before the real strong downward days happen. That's how great of a tool this is. All right, let's look at Amazon. Remember, once again, a very expensive stock. I'm not saying that you would have purchased this, just to show you how it works in inexpensive stocks as well as expensive. Now, here's a little bit more advanced trade. The majority of the bars are red, so someone would say, well, we're in a downtrend, but this is a bullish engulfing pattern. It's a valid strategy number 5, as you see here with the up arrow, and it's confirmed by the Pet D. So it's a little bit more advanced because you'd like to see more green bars, but it still meets all the qualifications, and the stock went up 300 points in the next 2 weeks, okay? Now let's look at CVI. Someone looking at this would say, well, Steve, you know, the market's been fairly strong. This is coming into the beginning of the year, and this is major support. I took that online class about the institutions and about support and resistance, and they're saying that all the institutions and the major banks are buying here. How can I go against the big money, right? I mean, the big money is never wrong, right? They're always right. So if they're making major support here, how can I go against that? All right, trust me, one trader's support is another trader's resistance. As I've often said, 40 years ago, I traded with the institutions because they used to enter orders in my book. I made markets in IBM. I made markets in US Air. I made markets in waste management. And if I can't tell you the number of times the institutions would give me orders, 500,000 shares to millions of shares, and they were usually wrong. So I would no further put my confidence in the institutions than I would for someone who just started trading 2 weeks ago. All right? What do we want to listen to? We don't want to listen to outside sources. We want to listen to the chart in front of us. And what is that? That's the Pet D, because the Pet D is our translator. It's telling us what the chart wants to do. So what we want to do is just click it on our platform. And guess what? The majority of the bars are red. So I don't care if anyone tells you there's major support, there's Fibonacci, there's Elliott Wave, there's going to be buying programs. I don't care. The market's telling me it wants to go lower, so that's the only thing I'll listen to. And now I just simply look for strategy number 5 setups. I click on strategy 5, and there's 2 right here, okay? So this is a high probability setup to go short CVI. This was in January, well before the market fell out of bed in the current down market we're having. Do you think the Pet D and strategy 5 can give you early warning into these markets? Now the stock was roughly a $40 stock. It fell 25 points or over 60% in 2 months. Remember, we're not looking at any fundamental news. This was well before the market fell out of bed. This is how sensitive these tools are. Don't you think these tools could help you going forward? Now, we're not going to tell you that every trade is a winner. For example, here's a strategy 5 buy signal, all right? Didn't work out very well. In fact, you most likely would have got stopped out. Now you're confronted with a sell signal. At this time, this is where most students say, well, gosh, I'm a little gun shy. The first one didn't work out, so why should I take this one? This is where the Pet D comes in as a great tool to confirm whether you should be taking the setups or not. Because remember, bar number 2 in the engulfing pattern needs to be colored green. Bar number 2 in the sell pattern needs to be colored red. So let's apply the Pet D and see what it generated. Well, what color is the outline of the signal? It's red. So that means we would not have taken the trade. So even though the signal did not work out, the Pet D acted as a filter and kept us out of that trade. So we wouldn't have had a loser. Now, the second signal, which is a sell, was confirmed because it is colored red by the Pet D. So we feel confident to take that. We haven't lost anything. We could buy the puts. We could short the stock. Let's say we own the stock. Rather than going short, we could just say, well, I'll use this as a sell signal. I'll exit my shares. Either choice would have been fine because the stock fell 20 points in the next week coming into this last week in March, okay? So this is how well these tools can help us. Why? Everyone says, well, Steve, why does this stuff work so well in terms of consistency? Because it's basing all of its decisions off of the market. We don't listen to news. We don't look at convoluted tools such as institutions or volume or support and resistance. We don't have chat rooms or trade rooms where you just mimic and copy what someone else is doing. We're only listening to one thing, the chart in front of us. Because after all, that's the source, right? That's what we're trading. So if that's the source of what we're trading, why would we listen to anything else? All right, last example here, ZROZ, 2 buy signals, both confirmed by the PET-D. This was coming into the first week of March, up 45 points. Now, I specifically picked this example to show you something that's going to happen later on, because look what happened. Now, if you had taken one of our sell setups, which had you out early, you would have had a nice profit taking either one of these setups. But let's say you took one of our setups that had you staying in for a while, or you wanted to stay in longer, then you would have most likely given back everything. Well, just remember this chart in ZROZ, because I'm going to be talking about it later and show you how you would not have lost money even though the market drastically changed trends. Now let's look at some different time frames and some different markets, because I know a lot of you don't just trade stocks. I'm sure there's others that like to trade other markets, other time frames. Here's a weekly chart in SYNA, all right? Just looking at these past 4 or 5 weeks, we're going higher. There's a bullish engulfing pattern. Now, most traders would say, well, I can't go long at the top of an uptrend. I want to look to sell. But remember, we don't use that conventional wisdom anymore. We want to trade in sync with the trend. So once we apply the PET-D, we see the last 4 weeks have been green. This is a bullish engulfing pattern. So we can take this trade. And it generated 50 points in the next 4 months. Do you see the higher level of consistency you'll have when you are in sync with the trend as opposed to fighting it? How about this example in the New Zealand British pound? All right. Obviously, we're going lower. Instead of trying to pick a bottom, we see a bearish engulfing pattern here. This is where you want to trade these because we're in sync with the downtrend. Look at the PET-D has colored all of these bars red. Even though we had a couple of up days here, they're both outlined red. So that's an up day, a couple of up days in a downtrend. These are selling opportunities. It's confirmed right here with a bearish engulfing pattern, 150 pips to the downside in the following week. And then lastly, if you're an intraday trader, here's a 30-minute chart of the QQQs. That's the ETF that represents the NASDAQ index. Kind of looks like a sideways market here, not much happening. This was in mid-February. Someone would say it's a range market. You want to stay out of these kind of markets because every time they come up, they go back down and vice versa. Well, is it really a range market? If we click on the PET-D, what is the color of all the bars? They're all green. So even though the PET-D is coloring these green, it looks like it's a range market. The PET-D is telling us, our translators saying, it wants to go higher. This is actually a buying opportunity where it's very quiet. Everyone thinks we're in a range. We're actually setting up to go higher. We have a bullish engulfing pattern, 5 points in 1 hour, okay? Not a bad trade, not a bad day trade. All right, so let's recap before we go into the question and answer portion. Remember, only buy or sell candlestick patterns that are in sync with the trend. And by trend, we mean the best trending tool we know of. That's the PET-D. Sure, you can use those other ones. We talked about indicators. We talked about patterns, different time frames, but they have a very minimal level of consistency. If you want to get the highest level of consistency for trading in sync with the short-term trend, the PET-D is the way to go. So ask yourself, we're into the first quarter here in 2020. We've had tremendous volatility. Do you think this method can help your trading going forward into 2020? I know a lot of you have been tremendously frustrated. You've been out of the market, say you've lost a lot of money this past month. Do you think this could have helped you in any way? Well, I think the answer is resounding yes, but extremely important points to remember though. What we shared with you today was not a complete strategy because we didn't talk about where you're going to be exactly entering. Remember, we have 6 or 7 different ways to enter. We didn't talk about stop placement. You have to protect yourself because not every setup will be a winner. And we didn't talk about exiting. Remember, we have roughly about 7 different ways to exit. We didn't speak about any of these things in today's educational class. But more importantly, we never even touched about money management. You know, how many shares, how many contracts should you be purchasing? What if you go into a sustained drawdown? How do you manage that? These are all important pieces of the puzzle to have if you want to have a sound fundamental trading method, all right, a trading strategy. Now, we have a great offer for all of you today, and it's a great, great discount. We're going to offer you strategy number 5 along with the PET-D tool. This is what we just discussed and shared with you today with all these recent examples. This is our Candlestick Combo Special, okay? You're going to get instant course access, detailed instruction. You're going to learn all the entries, all the exits, all the stops. Included with that, you'll get the PET-D course, which also comes with 4 different PET-D trading techniques, okay? So you're going to get a lot more with this great, great offer. But we're not going to stop there. Our attendee discount is only $497, one-time payment, and $97 per month. That's it. All right, this would normally cost you thousands of dollars. We're just asking for a small one-time payment of $497 and then just $97 per month. This is for a limited time only. I can almost tell you that most of you in this last month lost more than $500 trying to trade the market. How would you like to get more than 40 years of information and education I've accumulated for your lifetime? It's yours to keep for less than $500 for a one-time payment and $97 per month. Now, once again, we're not going to stop there. You can also purchase both courses with no lease. In other words, there's no payment for $29.95. So we're going to waive the annual fee included. So if you just want to say, listen, I'm sold, I want to do this, one-time fee of $29.95, and that's it. We'll waive the annual fee. But we're going to go even further. We're going to throw in 12 months of the platform. Now, everything you saw today was a display of charts on our platform. The one-click access to the PET-D, being able to click on Strategy 5, you're going to get all of that. Now, it normally costs you close to $1,200. We're going to take that price off altogether. In fact, we're throwing in 12 months free. So for a one-time fee of less than $500, $97 per month, we're going to waive the close to $1,200 fee for the platform. We're going to give you a full year's use free. Now, here's what comes with the platform usage. You're not going to just get strategy number 5 in the PET-D. You're also getting our proprietary buy-sell line that tells you the overall trend. It's a great way to determine what the overall trend is, and you can have the PET-D in sync with that, so you have an overall and a short-term time frame in sync. You also get over 90 of the most prominent technical indicators you can experiment with. You have our strength of trend tool. This is a great tool that will many times tell you when a trend is running out of steam. This comes along with personalized tech support. But there's also one other bonus that we're including in this as well. We're going to include the scanner. The scanner is amazing because if you're not able to be in front of your computer all day long, you can scan on a nightly basis for what you want to trade the next day. So you can scan for the entire universe of stocks for strategy number 5 and PET-D setups. It's that simple. And all you have to do is click on strategy number 5, click on scan. You'll see the signals appear in roughly about a couple of minutes once you pick whatever market you want to choose from. And as you would have seen here, sometime in mid-February, a buy signal was generated in SHOP, okay? If you wanted to apply the PET-D to confirm, all you'd have to do is simply click on the PET-D and you see the colors change. And now you have a confirmed strategy number 5 signal. You can take that. You can either buy the calls, buy the stock. It's up to you, but the stock gained 115 points in 3 days. This is something you could have actually scanned for this past month. Now, we know not everyone just trades stocks, so guess what? You can scan other markets. Here's a scan of the Canadian dollar. An older chart, this Canadian dollar had 2 strategy number 5 buy signals, went up 350 pips. You could have scanned for a 4-hour chart of the dollar yen. A sell signal was generated, 100 pips, okay? This was on a 4-hour chart. You can intraday scan 10-minute chart of the E-mini. You see the E-mini turned the bars green. The PET-D turned it from green to red. Strategy 5 signal was generated, 20 points in the next day or so. That's $1,000 per contract potentially could have captured. There's another one. Here is an hourly chart of the E-mini. Obviously, it's been going up. You apply the PET-D with strategy number 5. Look at all the buy setups you could have scanned for on an hourly chart. And as I told you, we wanted to remember that one stock, ZROZ. Well, this is where our automatic exit levels come in. This is a great feature that you get only on our platform. You won't find it anywhere else. Along with all the strategies, along with all these different features, along with the scanners, you also get our automatic exit level. Now, remember those 2 buy signals that were generated? All you have to do is click on the arrow underneath the signal, and choose exit levels, and will automatically, even before you enter the trade, tell you where the proprietary exit levels should be according to this specific feature. Now remember, we have 7 different ways. This is just one of them. Had you chosen any one of these exit levels, it would have saved you from the trend changing and the large sell-off in March. So you see, you won't find this anywhere else except on our platform. So before you even get into a trade, you can see where these high probability exit levels are. Here's another example. In ANSS, we had a buy signal generated here, strategy number 5. Price just got up to the first exit level and then fell out of bed, but then you could have recouped it. Here was a sell signal generated. This was in the end of February, and look at all the different places you had to cover your short. Trust me, a year from today, there's so much information and knowledge packed into these courses, you will have wished you became a member. Take advantage of these great discounts. Now is a great time to take advantage and to take this time to study. If you're too frightened of the markets, now is the time to take advantage of these great discounts and get into the market and study and paper trade so that when the market does settle down, you'll be that much ahead of the game. You have a great opportunity here. You have a great gift by this increased volatility, because if it's too much for you to handle, now's the time. You have all this extra time to study and to research using our courses. Okay, so let's cover what we said again. We're going to throw in the strategy number 5, the PET-D tool. This is our candlestick combo, along with a 12 months of our platform, all for just $497 one-time down payment and $97 per month. Okay, this is a great offer. I can't think of a better way to get back on board if you've been struggling with your trading. Here's how to take advantage of this. Contact Pro Trader Strategies. I developed the platform. They're in charge of all the tech support for the platform as well as the discounts. You can email them, or if you're really serious about this, I would suggest just calling them up directly. They have trading consultants manning the phones right now. They would be more than happy to take any of your questions concerning pricing or concerning the strategies and tech support, and they would answer any question that you would have concerning that. Now, if you're ready to just jump in and become a student of mine, that link you see at the very bottom is the link that will take you to the sign-up page, and that you can just sign up online. Now, if you'd rather not copy that down, a live link has been posted on the chat box on the GoToWebinar column on the far right. So you can use that link in the chat box to click on, okay? Now, I promised I would answer any questions. We have about 10 or 15 minutes left. If you do have any questions, now is the time. Just open up your question and answer period, and you can ask me anything you'd like. I see I have a question. This was probably asked before I got to this during the presentation. This always happens. Someone is saying, does this work on currency pairs? Yes, it does. I believe I showed a 4-hour chart of the Canadian dollar. And if you're the type of trader that likes to trade even smaller time frames, I know of traders that use this in Europe on roughly 10-minute time frames. So there are a lot of traders that like to use this on very small time frames or maybe on higher time frames. It makes absolutely no difference, okay? Someone is asking, can you use this on larger time frames, like say monthly bars? Yes, you can. The main thing you want to make sure is that, yes, someone's asking about longer time frames. The main thing you want to make sure of is that if you go out, the longer time frame you go, you will get the less signals, because that's just the way, that's physics. It's just, you have to wait a month for a bar to be generated, or you have to wait for a week for a weekly bar to be generated. So obviously, it just stands to reason that you'll have less signals because of the time difference. Whereas if you're looking at 5-minute bars, yes, you're going to get a lot of signals because there are a lot more bars being generated. But does it mean that the signals are any less valid? Absolutely not. We have tons of traders who trade this, like I said, on monthly bars. They like to use this for their long-term investments. And one other thing someone is asking, does the PET-D work on long-term? Yes, it does. It works amazingly on long-term as well. So even though it's a short-term trend tool, you can apply it to monthly bars, weekly bars. It's up to you. But we have some great ways to determine whether we're in a bull market or a bear market using the PET-D on longer-term time frames. That's a good question. Somebody's asked, what if I want to use this on TradeStation? Well, I would contact Pro Trader Strategies. If you have another platform like TradeStation, MT4, Metastock, NinjaTrader, Thinkorswim, Pro Trader Strategies would be the ones to contact, because they can supply you with the add-ons where you have the up and down arrows, and also the add-on that will change the colors, green or red with the PET-D. But it's been my experience, that's why we developed the platforms It's because we wanted to make it as simple as possible. So it's been my experience that these other platforms, sure, you can get the up and down arrows with strategy number 5, you can get the pet D change colors, but it's a lot more cumbersome than just simply clicking on strategy 5, clicking on pet D, and it's automatically there in a matter of seconds. So sure, you're free to use these on other platforms, but why would you want to make it more difficult? We specifically designed it to make it simple. And most especially, you won't get the scanner on other platforms. We have the scanner there. Everything is one click away. And roughly, you can scan for the S&P 500. And in less than 5 minutes, you'll see all the setups for the S&P 500 and the NASDAQ for the next day. So that's how really simple our platform is. And we made it that way. And it's just loaded with tons of information. Someone's asking about my services. Oh, okay. One thing I did not mention. Whenever you become a student of mine in whatever course you decide to become a student in, you'll have me as your personal mentor, meaning you will have my personal email address. You can contact me whenever you'd like, and I will answer any questions. So let's say you become a member of this course, the Candlestick Combo, and you have a question over the weekend. Send it to me, and I will most likely answer it that day. That's how sure we want to get back to you. So I'm right there with you every step of the way, okay? Okay, good questions. As we come to the end, I guess there are no further ones. Remember, if you have questions concerning pricing, maybe you're interested in another strategy, or maybe you're interested in some questions about tech support, please do not hesitate to contact Pro Trader Strategies. Call them directly, 310-598-6677. There is absolutely no obligation. They have trading consultants manning the phones that would be more than happy to answer any question, and there's no obligation. And you can sit and think about it. My only suggestion would be just don't sit on this too long. We've always had prospective customers say, hey, you know what, Steve, I'm interested in purchasing that method you talked about last month for roughly $700. I really want to purchase that. And guess what? You know, that offer is no longer valid anymore. The price goes back up to $2,000 or $3,000. So you don't want to sit on this great offer, which is less than $500, because it's for a limited time only. You not only get Strategy 5 along with the Pet D, you'll get a full year of the platform along with me as your personal mentor to email me whenever you'd like. So it's a great, great offer. Take advantage of this. Here's the phone number as well as the link. And remember, if you're struggling with your trading, or if you're sitting on the sidelines, you're afraid to get back in the water, now you've been given a great opportunity to take this time to study with things that really work. So you can take this strategy and this method for the next 2 weeks and sit and really learn it like the back of your hand. So when the markets do settle down, you'll be that more ahead of the game, okay? As we take one last look at our disclaimer here, I just want to thank you so much for taking time out of your Wednesday. I really wish you all the best of luck in trading, but most especially, I look forward to all of you becoming students of mine in the Candlestick Combo course. Thank you so much for attending. I'll see you next time. Bye-bye.